Welcome back, everyone. This is Thomas Triple T Ty with another new bullish crypto analysis. Before we dig in, if you find value in this video, feel free to smash the like, ring my bell, hit subscribe, or leave a comment in the YouTube section at any time during the video. Let's dig in and take a look at the derivatives market for Bitcoin. This is Coinalyze.net 4-hour chart. Let's take a look. We see that price has been trending down, but in the last several candles for the 4-hour candles here, we see a slight uptick in price. That's good. Along the way, open interest has ticked up. This is open interest backed by stablecoin, and this slight uptick here, that's positive. But if you look at an overall trend, it's still somewhat downward. And if you look at this portion right here, it's more like consolidating sideways, except for this low dip here, where we had some liquidation here. This is open interest aggregated, backed by coins like Bitcoin or Ethereum, going sideways. So let's take a look at funding rate. We see funding rate fluctuates on the 4-hour chart. We got some funding rate in the positive here, but it's at 0.0083. That's the highest here. That's pretty much neutral on average. And we get it dipping down as low as negative 0.006, 0.007. Although that's negative, I still consider that somewhat neutral. So we have this period here where price was dropping, funding rate was dropping here, and then when funding rate is negative and open interest is rising or extremely high, that means the shorts are paying the longs to hold their position. In most normal in like when open interest is high and funding rate is extremely low, that could signal a potential short liquidation. Sure, price went up here, but I don't think that's due to this here, funding rate and open interest. Open interest is not that high. Compared to before, and funding rate is not extremely low to signal this. This is more something else we'll talk about in a little bit. So to me, this is not enough of strong indicators to signal the upward price movement, even though it did move up. Down here, we take a look at demand. Demand dipped down here towards yesterday, and then it's rising slightly back up here, but not significantly. It's just slight increase, which is bullish, a little bit bullish. Oh, I forgot to mention back here. If you look at the blue line here, I hope you can see it. That's the average. The average is trending downward right here, at least since the 19th of February. Actually 20th of February, it's been trending down right there. But like I said, it's still relatively neutral. So it's not that strong of an indicator. Let's go through the next chart. This is Bitcoin's open interest weighted funding rate. And it continues to, on the lower time frame here, you're looking at February the 22nd, you see that the price is red and the weighted funding rate is in green. The funding rate went up, price went down, funding rate went down, price went up. So it's holding this somewhat negative correlation, at least under the lower time frame. What does this chart tell us? Well, if you can see that the funding rate ticked back up here, and if it continues to go up this way, upward, price may revert back down. Okay. Let's take a look at options. Open interest, MaxPay by strike price. For the 23rd, tomorrow, we have MaxPay at 38. And for the 24th, the day after, MaxPay is also 38. In general, in normal market conditions, as normal as crypto can be. 80% or so of the time, price tends to move towards MaxPay. And we're currently roughly at 38 right now. What do you know? And by the February the 25th, it's predicted to go to 40K. That's $2,000 away from here. 25th is a day we want to pay attention to because it has high volume and also high open interest on that day. And we'll see that in the next few charts or next chart or so. So yeah, it's predicting price will go up to 40. Okay. And here is the dates. Here's the 25th. It's one of the highest volume by expiry day. So here's a high volume here. March the 25th is the next highest volume, but this could change as we approach the 25th. So the 25th is a day we want to keep an eye on. Likewise, for the open interest, the 25th is the second highest level, has the second highest amount of open interest next to the 25th of March. This is options, gamma exposure. So I previously mentioned about the 40K level here. It's got high amount of puts and calls. So calls are the greens, puts are the reds. So at 40K, that's a very volatile area right there. Additionally, we want to also pay attention to the 35K level and 38K level, where they have higher than average put levels. So we want to pay attention to those too. So 35K, 38K, and 40K. But specifically more for 40K because it has both calls and puts. Taking gamma exposure a little bit further, we want to take a look at this chart from Levitas called BTC Gamma Exposure Index or GEX Index. And that is the red graph line here. And you can see that I charted it out here. It's put in, here's the support at the bottom. Here's the resistance at the top. It's a descending wedge, and it's putting in on the support lower lows. Here's a low. It went lower. On the resistance side, it's putting lower highs. Here's a low high, another low high, and then it kept going lower. So this is a bearish signal. Additionally, you'll notice that the zero level is right here, right there. Zero level is right there, and you can see the red GEX gamma exposure line. It went and tested the zero level, tested it, went down, retested again, went down, and so it's stuck in the below zero, in the negative area, and that's bearish. It's looking like it's moving up, but it's touching this resistance level that's trending down. If it breaks through that and breaks above zero, that's more bullish. But if it bounces down like it did here, see, it bounced down, and then now it's trying to retest again. If it bounced back down like the dotted red line here, that's bearish. But if it breaks above this line and the zero line, that's a bit more bullish. Given the situation with Russia invading Ukraine, I think probability weighs more towards the downside. And back here, the GEX, you can see the GEX, the red line, it's been above zero most until here. This was around February the 20th. It broke below zero and has been pretty much staying below zero. So that was, 2 days ago? Yeah, 2 days ago. going on here? Let's go to high block capitals, liquidation levels, and take a look. We had a downward trend here, and we saw that the short liquidation levels built up. It built up as high as roughly almost $9 billion on Binance. This is just Binance alone. And then price started rising up. And this, I mentioned this in my last video about Bitcoin's derivative, that if there's not a lot more FUD, more than likely money makers will, smart money will take the opposing direction, take long, and push the price up, and the price went up. Even though there's some volatility still in the macro environment area. So it went from negative 9 billion down to roughly 4.5 billion. But the short liquidation level remained higher than the longs. Shorts up here, longs are down here. So shorts high liquidation levels from 25x to 100x is still roughly around $4.5 billion on Binance. So still more potential for price to go up, but it's gonna, it has to fight the FUD from the macro environment, which will likely push the price down. So there's that conflict right there. But yeah, if price goes down some more than likely people will take short positions, and they'll build up around this area, and price will move back up and liquidate them. Let's look at the heat map and see where our big levels are. Our main levels are below around 34K, roughly 33.5 to 34K, and we get some decent levels there. Down below at around 30, that's solid and growing. It's now 615 in size. It was 300 not too long ago, and now it's almost doubled. So people are expecting price to potentially drop below here, but it has to break through here first. This level right here, though, if we add it up, we got at 34,500. That's 42, 62. Make that 100, 161, 261, 83. Make it 80, 281. So roughly 360, 370. So you get roughly around this whole section right here. It's around 400. That whole section is less than this section. So if price was to be forced through here, it probably will break through here and then go to here. Or yeah. So that's not a big level. Previously, we've seen levels in the thousands. So this is nothing compared to it. But it could change. It could definitely change. That pretty much wraps up our derivative markets. So let's review. Let's go through and review some of these here. Basically, on this chart here from Coinanalyze.net, not strong enough indications here to impact price. But this is good. This is more demand here starting to pick up. Over here, weighted funding rate, potentially price could go down. Could go down if the funding rate continues to drop. But if funding rate continues to go back up for the weighted funding rate, and then price could go the opposite direction. Strike price, basically, it's going to hang around 38K and potentially trend towards 40K if there's not more FUD in the market. 2 days to watch out for, the 25th and the for February and the 25th of March. Levels to watch out for as far as the gamma exposure, 40K, 38K, 35K. And based on the GEX, it's trending downward. So it's signaling that potentially more downward pressure coming. And on the liquidation levels map, heat map here, we liquidated a bunch of shorts already. So more than likely it's going to sit here for a little bit. and then it will decide what to do based on the FUD. Because it's harder to fight against the FUD because you have to use more money to influence the market to move in a certain direction. So I think they'll pick an opportune time and they'll do it. It's not a matter of if, it's a matter of when. So going back up, it's a matter of when to liquidate these. But they could easily go back down, and not by their means, but it could be a compound of macro environments and also people wanting to liquidate down. But more money's up here. Yeah, and the lastly, 2 levels to keep an eye out for as far as where Bitcoin could drop to is support at around 34K and 30K. I hope that added value for you from a derivatives point of view. Appreciate your time. Feel free to hit the like, smash the smash the like, ring my bell, and hit subscribe and leave a comment. Appreciate it. I'll see you in the next video later today. Peace.